The 4-step method to high performance trading is a free download to help traders build their mindset routine to improve their trading performance in live time. The 7-step daily routine for high performance traders is about developing the daily routines and processes to help traders continuously develop and get 1% better a day in all areas of their life. They are both free downloads. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to review one of the best opportunities today for traders in the U.S. session, but also the concept of rinse and repeat. Not trying to read the markets or read the tape, but identifying instruments that have the same reproducible rinse and repeat trading opportunities for easy, stress-free, zero emotion, zero thinking trading setups. Now we talk about the basic model for trade entry criteria, page 29 in the playbook, to keep things really simple. But also the most important are the signal days, because they can alert us to instruments that are potentially setting up for a parabolic opportunity. And if they have already left the station in an earlier session, whether that's an inside day, first red day, or first green day, we may also have the low-hanging fruit trend continuation trading setup. We're looking at the British pound 1-hour chart. It closed in breakout on Friday, the last trading day of the month. Monday was the first day in the new month, first trading day in the new month. We had 3 days of breakout longs triggered in the market. Monday broke out of Friday's high of day. Wednesday broke out of Tuesday's high of day. And Friday broke out of Thursday's high of day. And Thursday was also an inside day. Now, all this information does is alert us to a potential opportunity on an instrument in the session that we're trading. But more importantly, how does price behave on the day? We have a market that is closed in breakout outside of the previous week's high of week. This market could continue into Asia and London and just be in breakaway still in the long direction. But more importantly, how does it behave when we come to our session? Prior to the U.S. session, we've broken the low of day level. This market has broken down and broken the previous day's low of day. You'll notice that the closing price from Thursday can now potentially act as a neckline. We have inside bar traders triggered long into the market. We have volume trading on top of Thursday's inside day closing price. Now we've broken the low of day level, which means we have lower lows now. Lower lows on the inside is the setup for the pump and dump template. We have Thursday's closing price level and Wednesday's closing price level acting as a potential ceiling. The first hour pumps up into the beginning of the second hour, putting in a peak formation into the high of day made in the London session. A micro head and shoulders made in the gap time, a lower low, pumping up, and then engulfing back inside of our universal entry criteria, again, page 29 in the playbook, for the parabolic collapse back into higher level longs from Wednesday, Thursday, Friday on the backside of the previous week, in a week that closed in breakout outside of the previous week's high of week level. This is an example of an easy, zero stress, zero thinking, and virtually zero management. Once this trade breaks through the level, we are at break even, but all more importantly, recognizing to take profits on this trade. A 50 pip collapse, a parabolic 50 pip collapse plus from the high of session level in the US window. Now there was major red news at 10 a.m. which brings us down to the bottom of the range, and an example of where the news was fairly non-reactive with this particular pair, but more importantly acts as a catalyst to complete the move. If we take our low of day and project it to the high of day made in the gap time in London after our lower lows, that gives us a 100% expansion of our rectangular consolidation on the day, which roughly coincides with our 50 pip round number box levels, 75, 50, and 25, allowing traders to potentially squeeze the maximum amount out of a winning trade as it goes into consolidation, locking in the profits and getting off the screen. An easy, stress-free, zero emotion, zero thinking, parabolic trade opportunity in the New York session. The low-hanging fruit continuation trade. Again, page 96 in the playbook, keeping it as simple as possible. So one of the things that you want to consider, again, with building your muscle memory is that if the chart doesn't look this simple, then maybe it's a science project. It should be simple, easy, zero stress, zero emotion, and pretty much zero thinking, and be moving to its projected target without any major backlash. That's how simple the trades should be. Going back to our original template, we have our opening range, initial balance, day 1, day 2, day 3, expanding the range, 3 days of breakout traders, a signal day, an inside day, triggering trend continuation on the closing range of the week, taking out the high of week level, 3 days of breakout longs triggered into the markets, inside bar, triggering new longs into the market and closing in breakout and breaking down on the day, on the new week, a new timing cycle, breaking the low of day level, lower lows on the inside, pumping back up into the trapped volume for the parabolic collapse into higher level longs in the New York session. And you'll also notice back into Monday's opening range high, where breakout traders were triggered into the markets on Wednesday, day 3, the midpoint range of the week, and hitting that level. So again, another area to be locking in the profits. Our measured move target was hit. We had a 1 bar stop on that trade, keeping things tight. There should be no pullback. The market should be moving to its trade target ASAP. So if they don't set up that easy, perhaps it's not a playbook 90-10 setup. When they're 90-10, that's exactly how they should go. Rinse and repeat. We looked at a similar example a couple of weeks ago on the Canadian dollar. We had breakout traders triggered into the markets, 3 days of longs continuing into the closing range of the week. A slightly different example of where the market pumped up into the highest closing price of the week and consolidated and reversed into our New York session. Friday closed in breakout. Market coiled sideways inside of the high of week level around the highest closing price of the week before engulfing first hour in the US window back inside of our universal entry criteria, again page 29 in the playbook, for the parabolic collapse. Same setup, different instrument, slight different variation, but again, simple, easy, zero stress, zero thinking, zero emotion, parabolic trade. If they don't set up that easy and look that simple, perhaps it's a science project. An ACB opportunity. 3 days of breakout traders triggered into the markets, a 3-session setup. Just another example of sitting on your hands and being patient and not worried about catching little moves or trying to read the tape or figure out the market or count pushes or sweeps or gaps, but looking for specific setups, hunting them, waiting, and understanding that when they present, you'll notice that there's not a lot of auction process back and forth, reinforcing the concept of looking for scalable opportunities. A scalable opportunity is where you can scale into because it's not coming back. It's going to collapse. It's not going to auction back and forth and eventually get to your figured out destination. We're looking for the opportunities that are going to go and not come back. It's simple, traders, and may the markets go with you.